Hello and welcome. It is the completion of the 29th day of July 2019, heading into the 30th and second final day for the month. But before getting into the gold and silver charts, let's first take a look at the federal government debt on the quarterly chart. Basically, it's $22 trillion. That's a large number. And back in 1980, just an approximate number, it was like 900 million, almost, or billion. Yeah, almost 1 trillion. National debt up about 23, 24 times higher. That'll be important when we take a look at these charts. As first will be gold, and we're taking a look at that divided by the national debt, the number, index number, multiply a million, which then gives me the price of gold. And in comparison, a bit better for things like inflation adjusted and things around that mechanism based on how the dollar performance or lack thereof. And we see it versus this on the high and where it was back. It's not that it came back to the support or resistance rather that I encountered back in 2003, 2004. Take a look at this for silver. Well, we're right at these lowest levels there. This is another way of telling me that silver's about the cheapest that it's ever been. It's as cheap as it was back here in 2015, cheaper. We look at this, we look at the lows in here. Cheaper than it was there, at least adjusted towards inflation. And as cheap as it was during the 2003 lows. Now, as I mentioned, it's over 20 times the national debt from where we stand now at the 50. And this high in here, well, the national debt at this point, it wasn't quite 22 trillion, maybe seven. Yeah, we'll have to go like 7, 8 times higher than this right now. Would get us to where we were back in 1980, which would be like 22, 23 on this index, or a gain of about like 30 times, as another way of putting it. But again, we're seeing how this market has been selling off. And just for comparison, let's take a look at the Dow Jones in the exact same method. And what I might do is I might download the national debt data because I have silver data going back just really from the same time frame here, like 1968. So I could take a look at it a little bit better. But in this example here, we can see stock market is at all-time highs, but looking at it from this level, it's more than half the price, calculating it from these 1968 levels. And here's another way of putting it too. So if this is half the price right now, and we're looking back at, say, 1971, and at that time, the index was like 900. And here we stand at 27,000. So that's 30 times. And if it's losing half its value, that's like, well, 60 times. And we'll take a look at gold against the Dow Jones and silver against the Dow Jones before we take a look at them against the dollars, which will be the US and Canadian. But gold against the Dow Jones, obviously having overperforming it magnificently from the 2000 lows. 20, just multiplying it by gold divided by Dow multiply 1,000, just to give me a number that's positive. It's over zero. And yeah, up to 160 down to 52. So lately, of course, we can see that gold has retraced. So it's definitely cheaper. If you're looking at what's overextended and underextended, a good case that gold is still well cheap as far as its price to buy. I'll add a couple extra zeros in the mathematical calculation for the silver, which is much lower. Again, just like we seen it against the debt, at the lower end of these prices, we've seen it well over 300 go down to 60. So we've had the stock market overperformed silver by much better than 5 times since the high. And that was when, of course, silver was around 50, and the stock market, of course, was much, much lower at this point. Markets go up, markets go down, and this is going to obviously go back up at some point. The question is, will we go down further for so much amount of time? Maybe. But when we look at things against the dollar, let's try to make more sense of it. First, let's take a look at it against the Canadian currency. And we'll just quickly go over the longer term time frames. Avoid most of the everything really before the daily. But within the quarterly chart, from this declining move in here, it's just been a bunch of sideways, staying within this 18, some extended part for the first few periods at the upper end. Now a more extended period at the lower end, but making a move really just back up to this level of resistance. We should see a little more clearly amongst the monthly chart, but just a long, long, long sideways consolidation pattern. As we originally established a level of resistance here, it's still established. It hasn't been tested since it left it there. This is 26 and a half in August of 2016. That is now up and approaching 3 years. And amongst that time, whereas support come into play, well, support was originally established in here, and it's been remaining to be a fantastic level with a little pierce below here in these 2014 lows when it went down to 16 and 2/3. It's still a long ways away from that resistance level. That, yeah, it might have a sharp move as far as levels it might reach before then. Maybe you know what, this it may be in the halfway through it might find some uh, resistance, but it's just attempting by getting over the attempt or getting over the 18 within this momentum to make that move. Now it's really important in doing such for it to be able to hold. We can see there is the three green candle move, but really this one here, this is the period where it goes up six and 3/5 of 1%, and it managed to barely pierce above this level of resistance. It pulled back a little bit within it, but amongst doing so, the last week it had a good positive week, as it never went below the close. As low was the open, it barely had a higher high, and it closed at the upper end. So that's a positive period. And this is just the start of the week, so we'll see how it goes in and moves in towards it. Meaning we haven't had much data within it, so we've had an amazing gain. What's important within this is the higher lows. We got this low in here from this last major key support mark. I wouldn't mind see if it's going to pull back to hold around the 20 and 3/5 area, 2060, 2050, and maybe as deep as 20 and a quarter. But at the same point, I wouldn't mind to come back at a decent pullback to about 21 in this little change area, meaning we go higher from here and then pull back if that's when the next little pullback is going to come into place. But getting above this level of resistance starts to mean, okay, now we can start to talk about testing some of these other areas in here. On the daily chart, there's several days in a row going up from like barely under 20 and now 21 and a half, and just really holding in there for the most part. If we switch this over to the American side, we get a lot of the similarities here in the same daily time frame. Nice little amazing green candles up, and just a lot of sideways consolidation, correcting mainly through that of time. Only a couple days away before the 18 average should rise up towards that area on the triple day time frame in here. Same deal, holding this level of resistance on the US dollar side. We're talking 15.40 up to about 16 even on the weekly term time frame. Again, same thing here with this green move up, this very spectacular week where it didn't go below the open of the week. So the low was the open, barely breaking above and just hanging in there in the very early term within this particular week. And on the monthly chart, same thing again as far as making an escape from the 18 average. The last time it made an escape, it had a failed breakout. Oftentimes, from failed moves and brings a fast move in the opposite direction. This didn't have it. because there's a failed breakout, but it had a very long successful correction. In fact, we still might have that uh, breakdown from this because it hasn't passed completely this correctionary phase. This is what this attempt is trying to do. And because of this lower level, it's got a long ways to go to reach this resistance high of around $21, which represents some Fibonacci upside that I calculated well before it even hit this $50 level on the triple month time frame. There's price action just staying a long extended amount of time within the 18. It did so originally from years 2016 and 17 in a declining fashion. Now it's doing it in, well this quarter in itself, a neutral one because it's managed to hold or stay above the 18 lows for the month. It's got a nice little high closer to the 18 of highs itself. So that's going to be enough to make this go sideways. An exitation here would be getting above 18 in good change. You'd be like, okay, now are we ready to resume this into a bull market, revert it into a bull market, however you want to term or put the term or label upon it. So yes, now let's take a look at gold. And on its 3 month term time frame, definitely more of resumption of trend, not reversal, because this has not managed to go in any bear market setup. Beautiful up move, really going sideways, consolidating through a long period of time, considering this breakdown occurred in 2013, so it's been over 6 years since that event. It's had a lot of resistance upwards here at about the 1400 and lower, but it's been holding and staying above that 1400 very nicely for quite some time. We've had a good amount of support within the 18, and we had this very noticeable failed breakout, which got above this double hit level of resistance, hit June 25th and again on July the 3rd. So on the 18th, it had its noticeable break above, but it quickly gave it all back and then it just consolidated and stayed within this. So now it's trapped in this band. If this thing can get and hold and stay above for 14 and a third, like 1433 and higher, for a good period of time, or if you see this starting to get above 1452, 1455, then this thing has the capabilities of having a fantastic move. We can see a lot of the sideways correction. If it didn't technically touch the band, that's close enough for me. That's having a time correction upon it. I can find out exactly if it mathematically did. It looks like probably not. But in the last period, the 18 average of lows was, or highs rather, was in at 1408 and the low came in at 1411. So no, it missed it by $3, but you know what, close enough for me. This shows that nice sideways consolidation. We've seen most certainly how big this resistance is, which is why on that spot, if it's able to get above, well, on the monthly chart, that means moving into areas not seen since it was declining back in 2013 or making 6 year highs. And then that's big news. That's going to make headlines on the papers. They're going to give you some sort of news story because of what happened. Oh, this happened because of this. I'll come out and say it happened because some sort of baseball trade happened. Or because the CFL football game went a certain way. Or after the BC Lions did this in a game, gold went up. It would be a technicality more than anything. Well, I'll wait until that happens, and I'll find some stupid reason and tell you that gold went up after this reason. But I got to wait, of course, for that to be the case. And getting above here, we start to talk about this key Fibonacci resistance at 1522. Most certainly looking like a very positive hold month. And a move getting above this most certainly seems like is on the cards because that was really the statement with this move in here. Ford attempted to, this first attempt here from the downtrend didn't succeed. And then after having a nice successful correction, small attempt here, August 2017, no. Again, it had a small attempt on January of 2018, and it did so for quite some time. So from January 2018 through April 2018, it was like, okay, this looks ready to go. but it never did break it. And then it had this decent decline with the pierce above this low. So it took some time just to get back to this level. And it got back there in February of this year, but then it had microscopic movements until just now. It's had that break. So that's a big deal and how I look at it. And because of this pause period, this gives me high probability that it's at least going to have a move, most likely relatively fast, towards the next level. And at 1560, I should put a risk. I should put a all bets trades of the like within everyone's own risk reward. Those whatchamacallit things they talk about. But you know what? That should be going without saying. For myself, when I hold my physical gold and silver, it's just that. It's physical gold, physical silver in bullion form, coins, rounds, bars, all that fun stuff. Some of them have cool pictures on it. And that's gold against the US dollar. Canadian dollar, much different story. Because we're talking about all time highs in here for the city. At least that's what it's in the test of. The previous month was the highest close that it ever had, and at 1,845. For the month, it's up about 20 basis points almost, or barely over 1%. So it's probably going to have a new all time close, but it hasn't gotten above this resistance technically yet. We got 1905 and 37. Last month's high was 1898. And this one 1891. So it's very close to making that of all time highs. And if gold's going to have a fantastic move against the US dollar, then it's going to most likely have a fantastic move against every other fiat currency that's in existence, which is an okay handful amount. And as I stated from the outset, when you looked at how these charts show against and division against the national debt, and it doesn't take a rocket scientist to understand that during this decade, basically, at least from the 2011-2012 high, that the prices of the metals have been suppressed down for quite some time. Well, when that happens, it's almost like holding a beach ball underwater, or just try, and then when you're unable to hang on to it, you have a big fury explosion kind of deal. In this case, meaning huge moves, 1, 2, 4, 5 kind of periods on the long term that would just have fantastic moves. On the monthly chart, looking or the quarterly chart rather, for gold against the Canadian dollar. So this was a level of resistance that it established 8 years ago plus. And back into this support level, attempt to get out. Nope. Nice little great support here at the 18 lows. But we can see that after the first quarter of this year, that was a good pause one, staying in at the 18 highs. And quarter number two, which is April, May, and June, oh, that's a big statement that it's ready to have a huge move. And again, looking at it breaking above this can oftentimes have fantastic moves. So far, 1/3 of the way through this quarter, it's July, August, and September. And it's one of those good hanging in there, of course, because on the monthly chart, just like on the US side, a good pause one within it. So that will conclude this video. Oh, actually, I'll put the gold to silver ratio on since, yeah, let's put that one in to finish it. As for the recent times, silver has been dominating that of gold because there was every red candle down over 0.5% for like 8 of them. And just yada yada, not doing much ever since. And then before then, we look at this on the 3-day chart. This has just been going up for quite some time since these 2016 lows. This is 65 all the way up to 93. There have been a lot of lower lows. We first had 65, then we had 67, then even a little bit at 68, then a higher low at 72, higher low at 74, higher low at 75, higher low at 81, or 80, really the 81 low, that 81.67. Do I count this as a higher low? Not really, no. So the last key higher low is like 82, 82, 81 high change. So it's at 86. It might be another higher low again with all of this wild move, since the last move gold had was just really really fantastic. And looking at this at a on a 3 month term, we have this major level of resistance that it is getting above, and I think it's going to be a short-lived move. We have this key level of support here, roughly around 48 to like 47 in this ballpark area. This previous low was in at 31, and I don't have the data on me from before, but the ratio back in 1980, well, I can just mathematically calculate it. 17 to 1, 850 divided by 50, which was basically the price. And historically, that's around where the numbers happen to come into. But to gold start this rally, it wouldn't surprise me if this still does go a little bit higher before it eventually has its top and makes its moves later on lower. But the market's going to do what it's going to do. The majority of my precious metals is via that of silver. And I own gold, but I like silver more. And buying gold now, really a couple of reasons. One, you're playing the short term move because gold looks to be the leading indicator, and then turning some of the gold into silver if the ratios do have a nice break above 100, especially 107, 110 plus, 120, then you can flip it into some silver, at least if you're able to do it the best you can on the ratio, because there is uh, the spread. Of course, it could be very expensive to uh, to try to make these trades, and unless you're really good at trading, especially if you can sell pretty much at the market price that it goes for. If you could do that, then should be able to ratio trade this no problem. But that can be a difficult task to do, selling gold and silver at around the same price that you would get at like JM Bullion, Gold, Silver Bull, and all the main outlets that sell precious metals. And yeah, so that would be available for one reason. Another, if you just like have like a whole bunch of silver and like no or very little gold, yeah, then buying a bit of gold I think is a good idea as well. Hence the reason for myself, for those two reasons, why I bought a half and a quarter ounce earlier this year, and if the crypto markets have a nice size gain before these go really up, the precious metals go up like really high, then I'm going to be looking to accumulate even more of the gold and silver. Through that, of course, of Bitcoin, Litecoin, and the likes. Thank you for tuning in and have yourself a great day. Bye bye.